Hey everyone, Tony Ivanov here, lead trader and mentor at TradeBuddy. Today I want to talk about offerings. I know, big scary word when it comes to the world of small cap penny stocks. I'm sure that lots of you have seen stocks do offerings to completely fall off the cliff. I've seen it many times myself. However, this has led some traders and especially short sellers to believe that if a stock does an offering, it's an immediate sell or short because the stock is guaranteed to fall. This is wrong. Absolutely nothing is guaranteed in the stock market, and you have to look at each situation and stock setup differently. While I will say that most offerings do end up causing the stock to plummet, we have seen some examples where the offering actually helped the stock trap short sellers and then squeeze an extra 100% plus or go full supernova like NNVC did last year. The two stocks that I'm going to be talking about today are pretty recent movers. They both moved today and over the past few days. DGLY and TMDI. I have been long TMDI since June 4th at around 67 cents, just holding the stock as long as it remains bullish. Right now it's at around $1.30. And DGLY I didn't enter until this morning after their offering came through. So you'll be able to see two different perspectives. The first will be how I reacted to a stock I'm already holding have an offering, and the second will be how I reacted and traded a stock after the offering came out. Both situations give great insight into the fundamentals of supply and demand and technical analysis as a whole. So with that being said, let's jump over to my screen share and get started. So TMDI, like I said, I went long this off of 67 cents, and going into Monday, which is today, my main goal once again was as long as the previous resistance holds as new support. That is what I base my entire trading around. As long as you can see right here, previous resistance holds as new support, that means the stock has a chance to go higher and test the higher resistance levels. And I'm going to hold the stock as long as it holds that previous resistance. So we can see today, they actually dropped offering news on TMDI. They dropped offering news right before market open. You can see the headline here. 18 million share direct offering, prices at $1 a share. So normally what you would do is you would read this and say, oh, offering, the stock is done, the stock is dead. And I'll be honest, when I had found out about the TMDI offering, I was doing the pre-market webinar in TradeBuddy. One of my students let me know that they did an offering, so I was like, oh, all right, I'll lock in some partial profits from my swing, because I'm already up from 67 cents, locking in profits at $1. I was already up like 42% unrealized and hadn't locked in any partials yet. So I was like, all right, offering, I'll lock in partials. But that was a bad move. What I did afterwards was I said, okay, wait, let me look at what the offering says, because the stock is still holding that previous resistance as new support. Thankfully, when I sold, I only sold partials, but then I held the rest and I said, okay, let me look at this headline. And what it says is, it says a direct offering. So there's two main offerings you can see. There is an at the market and there is a direct offering. At the market means that they sell all those extra diluted shares into the open market, meaning you and I will receive those diluted shares if we're buying. But what a direct offering means is that the shares are being delivered directly to the investors who are financing this offering, meaning that those shares never enter the open market. And usually with these offerings, they have a share lockup period of about 6 months, which means, yeah, the offering does increase the supply, but you won't see that increase of supply until those investors are able to sell, which is usually 6 months after. So yeah, we had an offering on TMDI, but number one, it was a direct offering, so it wasn't a type of offering that is going to directly increase the supply. The second thing we notice is that it's at $1 per share. Interesting, right? Because we know that the previous resistance as new support was $1 per share. So all they really did was they saw what the current support was and they said, all right, this is holding support really well, and we have investors who want to buy into this at this support, and they just gave investors those shares. That's not bearish at all. It was actually bullish because it caused a ton of longs who stopped out early because they saw offering, and it caused a ton of short sellers who just short anything that says offering. However, they didn't realize the fact that the previous resistance is still holding as new support, and they all got trapped. So that was a really good scenario for TMDI, and that's a very good example of, even though they did an offering, the big picture is still very strong with TMDI. It still is very bullish, and it has a lot of potential, especially now that we've trapped all of those sellers who sold because that offering news came out, yet it still held support. So we have the same kind of thing to talk about with TMDI, or I'm sorry, DGLY. So DGLY, the offering was not a registered direct. It was just an underwritten public offering. However, here is where you have to understand the significance of just basic supply and demand characteristics. End of the day, what's price ran by? It's ran by support and demand. There is no news catalyst that will make a price raise. The news catalyst makes the price raise because it brings an increase in demand. If the demand is not there, the price will not raise. So this brings lots of interesting scenarios, and this is kind of my mastery when it comes to trading, is it's identifying areas where shorts get trapped, and DGLY was a perfect example of that. I'm actually going to play a clip of this morning's webinar in TradeBuddy, a pre-market webinar where I talked about this offering on DGLY and how I went long in these 280s. Also, DGLY has done some tricky stuff today. So they did an offering this morning. You can see they dropped an offering of 5 million shares at $2.15 a share, and you can see this had a big gap up and it fell down. It trapped a lot of shorts who were only looking at today's price action and saying, oh, it's an offering, okay, short obviously, but it still is holding the previous high of day. And I took a small dip buy off of that previous high of day, just because, very basic, right? As long as previous resistance holds as new support, it's going to go higher, right? It's going to want to go higher. All right, so there you can see, this isn't hindsight. This isn't, oh, you just looked at the chart afterwards and saw that it held support. No, this is me having confidence with what I know works, because I have looked at my data and I have data-backed confidence. I know that previous resistance will hold as new support most of the time. When it works, I make a lot more than when it doesn't work. So for DGLY, like I said in that pre-market webinar, I just went long because it was testing previous resistance as new support. Anyone that was short in all of this price action, right? Anyone that was short selling this and they haven't covered, and then this morning it gaps up into the 4s, they're in massive pain. They're down over $1 per share. As soon as the stock retraces back down to where they break even, they are guaranteed to cover. That means it's going to hold support. If they don't cover now, then they're going to have to cover when the stock is up another $2 per share, and they're going to get margin called. So no matter what, it's a win-win for longs. If you can identify areas where shorts think they have the edge, but it's just because they're not looking at the big picture, you can get some amazing entries and ride some amazing short squeezes. Like I said, I went long starter position DGLY in this support in the 3s to 280s. It's up at $6. Just in one day, it's up 100%. And imagine how foolish you would have felt if you bought into this support in 280s and you sold that VWAP at 350s. Yeah, you made $0.50 per share, but you left so much on the table that you could have used to grow your account. So use this lesson. This is a very powerful concept. Support and resistance, previous resistance holding as new support. That's how I am able to buy into stocks, hold them for 100% moves plus, and grow my account exponentially. So there you have it, a quick little analysis on DGLY and TMDI. Notice how all of my trading is based on the same exact principles and systems. As long as previous resistance holds as new support, I will hold the stock higher. These small caps have so much potential in them, and it is absolutely absurd to restrict yourself to only 10% or 20% gains. Take what the stock will give you. Trust me, you will grow your account so much faster. Leave a comment down below and let me know where you are currently seeing success with your trading. Are you still stuck on buying breakouts, or have you learned the significance of buying into support? Let me know. I'd love to hear where you are on your trading journey. Lastly, I do want to give myself a little self-plug and promote my free trading checklist. You can get this using the first link down below. It's absolutely free, and it's the same exact list I give to my students who pay over $1,000 to learn from me. And we use this same checklist every single day in TradeBuddy to find stocks just like DGLY and TMDI. And I know that if you use it, your trading will improve. Once again, the link is down below, and I'll see you in the next video.